Thank you for joining us for Step 9, secure full transparencies of investment costs and fees incurred in the management of your portfolio. Now, if you'll recall, the fees have come up a lot in a lot of these steps in the past, and there's a good reason for that. You know, your bottom line of how well you did in your investment is after cost. It's after cost of taxes and after cost of fees. So there are a lot of different kinds of fees out there, and it will behoove you to know what those fees are because they're different from certain different investment types. They're different from where you purchase your securities and who you use to manage your investment portfolio. So let's just look at those various fees so you can educate yourself on them and ask what it is you're paying and who you're paying. The first and the very simplest investment fee is a commission. Anytime you buy or sell something, an investment, you're going to pay a commission. With stocks, it's very easy to isolate. If you're working with a custodian, you put in a buy, you put in a sell, and they will actually itemize that on your statement. You'll see how much that costs. And those costs do vary depending on where you buy and sell your securities. That goes along with bonds. A bond has a markup, and it's a lot harder to find the markup.
Now, recently they've added a clause that's going to make sure that brokerage firms add on a cost of the markup of an inventoried bond.
Okay.
Investment advisors like ourselves are unable to do principal type trading, but a brokerage firm will continue to be able to do that into the future. There are multiple costs. Justin entered on commissions, but I'm going to have a couple other items that concerned on costs. There's something called a bid-ask spread on pretty much every traded security. That's the difference between what you would receive if you sold the shares of a company stock and how much you'd have to pay. It may seem like a minor amount, but if you are investing through mutual funds, it can actually add up to a substantial sum of money. And of course, it's relative to the very size of the portfolio manager you're working with. As a portfolio increases in size, you're going to have to obtain more securities for a given position, and that's going to increase the cost in most instances of buying or selling an individual security.
Next, we'll have investment management fees. If you hire us, we have an investment management fee, and it's based on a percentage of your assets under management. If you use a mutual fund, for every mutual fund, there's actually a manager that manages the funds in that mutual fund, and they have their own management fee. That fee is called an expense ratio, and they're listed on any of the fund fact sheets that you can find. But at the same time, you may also be paying for the cost of advertising the mutual funds use, and that will be a 12B1 fee, and those are listed as well.
There's a great movement of individual investors moving from an actively managed mutual fund to passive index funds. A lot of times it's because of that stated fee, but one thing we fail to remember is that passive index funds have to mirror the index itself daily. The actual internal cost on that fund could be anywhere from 20 to 30 basis points in excess of the cost that they show you in their prospectus. And the reason is pretty simple. There's a lot of trading that has to be done, even though it's done by a computer without human intervention, is still as costly because of the same thing we talked about earlier, which is the bid-ask spread, and there'll still be a trading cost on buying and selling the positions.
There's two other costs you might want to watch out for. One of them we talked about in detail, and that was performance fees, and those are mostly involved with hedge funds. So if you happen to own a hedge fund, you might want to know whether or not they charge a performance fee, how much it is, and if it's justified. And finally, there are certain illiquid securities that you may hold. Maybe you got them from one place and you transferred them to another, but certain custodians don't actually like to hold those funds. They're illiquid, they can't find a market for them, and just to hold them, they'll charge you, and they'll have stated fees that you can look up, but they can be very costly. So if that's the case, if you have one of these illiquid securities that you're holding in your custodial account, you want to make sure that if you're paying for it, whether that's worth it or not as well. But anyway, it will only increase your bottom line of the investments of your account by knowing what the fees are and making sure that you're willing to pay them to meet that end. Thank you.
Thank you.